Good morning. What's up, guys? Happy FOMC day. If you forgot, the interest rate decision from the Fed is hitting at 1 o'clock Central, 2 o'clock Eastern, 11 a.m. on the West Coast. So we're keeping an eye on that. Typically heading into that, we get a little bit of better volatility. So the range thus far on the day, we're looking at about 110 points thus far. Hopefully that continues to expand. ATR on a 5-minute chart is currently 20, which I believe is better than this time yesterday. So let's get to work. 4 minutes out, and let's try to get it done today. Christian, how we doing? Roy, good to see you. Devaz, how we doing? All right, so, I mean, look, for me right now, I've been watching this market. And I have to take it bar by bar, because in my head, I'm thinking I'm looking for any reason to get short. The problem is the move downside, while aggressive when zoomed out, is kind of soft toward the bottoms. You know what I mean? I mean, you get this kind of thing, and then you get a bounce. Okay, decent close. Good push. Bounce. Decent close. Hey, we actually saw some follow through. Bounce. What I'd love to do is short a bull body that's an inside close of the previous bar. If it did end up closing above, then I'd have to take that setup from that video a couple days back and just risk the curl and see if we can get a push back up toward the 20 EMA here on the 5. But until that happens, I'm looking for any reasonable way to get short in what I see as kind of a soft trend currently. Halfway through this 5-minute bar, 2.5 minutes out. Let's see what we get here. Christian, appreciate you saying so, brother. Okay, 2 minutes. Yeah, I mean, this starts to be... I mean, look, if this closes as a bare body near the low... I am going to have to put it on, assuming it's not too deep. Like, if this pushed 25 points past the previous bar's wick low, I'd have to chill out and kind of hold off and wait for a bull body. But if it closed right here, you know, I would have to put it on, but I'd risk probably this full curl. How many points is that? Yeah, I mean, less than 30. That's within reason. We could do that. Minute 15, we'll find out. John, good to see you. Michael, right here, brother. You're in the right spot. Just price action. And logic. And context. All right. 13 seconds out here. Bull's trying to pop this back up. Yeah, there's nothing I can do on that bar, so we'll go next bar here. Let's pop around. Let's take a look at the 1 minute. Ooh, I actually don't hate the 1 minute. What's the 2 look like? I don't hate the 2 either. Well, all right. I mean, let's see what we get here. I think we could probably take a stab. I think we can. So let's see what we get. If we get a nice bull body closing near its high, especially if it's a shrinking bull body, but even if it's moderately sized, if it's outsized, idea goes out the window. But moderately sized, let's see if we can maybe fade it. A very reasonable trade. Gaines, what's up, big dog? How we doing? $30 seconds. Okay, we're about 10 seconds out here. I'm gonna get the copy trader engaged. Let's see if the bulls can pop this. Yeah, that's going the wrong way. I was looking to fade a bull body. So that's gonna roll over, give us absolutely nothing here on that 2-minute bar. So let's head back here to the 5 and see what we can get over there. Okay, 2 minutes out. What do you guys think? We gonna close? If the bears close it like right here, I'm gonna have to put on a short. And this is starting to kind of get away from us, so I think I'd probably just risk the signal bar. Yeah, I mean, you have this kind of deal. This body bounced up. Well, I guess this wick took out that signal bar. Still have to do it. With the understanding that, you know, if we take on a little bit of heat, I think that that's okay on a trade like that, because you can't necessarily expect a softer, I mean, I don't want to call the trend soft, because when you zoom out, it looks pretty fucking aggressive. But it's definitely not, I think, within reason to expect this thing to run 200 points without a bounce, because we've been seeing bounces all morning. They've just been short-lived. So, 60 seconds here. Let's see if the bears can get something done. With the look of that wick, we'll see. I may end up entering with just a limit order, but ultimately these bears have to close this current body in 50 seconds from now below that previous bar's wick low. Below 429.50, and we've got the icebreaker for the day. Can't be too low, though. You guys know. All right, 20 seconds out here. Again, bears can close this body beneath this wick low, but within reason. I don't want it running away from us. Then I'm looking to put on a short. Risk this curl here, to me, is the obvious look. Stay within reason there, bears. And I am going to use a limit order and get short there. Pop that up to 51.25. Stop is managed, or I guess risk is managed using the server-side stop. And we're sitting short. If we take a little bit of heat on this trade, I mean, that's okay. We've been seeing these bounces. But if we take on this much heat, stop me out and move on. I just want to be involved in this move, and that right there is a logical way to do it for me. So let's see if the bears can take this downside. ATR 20. All right, bears, there you go. Keep that pushing. You know, on a setup like this, I'm not looking to get half an ATR. I think for me on this trade as kind of a minimum, I'd like to see at least 3/4 of an ATR. A full ATR would be tremendous. But we gotta watch this here. All right, well, here's the bulls stepping in. Again, this is fine. This is within reason. Halfway through this 5-minute bar. But again, if, you know, risk for me on this trade is essentially totally offloaded to the computer. Unless we were to be in this for many more 5-minute bars where things start to shift and then we get a bar where I'd have to manage. But like on this bar and more than likely the next, I mean, we'll see. There's really nothing for me to do as far as managing this thing early. That wouldn't be a rule break for me. Which I'm not into. Breaking rules. So, let's just see if the bears can let the bulls have their little bounce. And then continue the trend. HR 21.5. $60 seconds left here on this 5-minute bar. And let's see if the bears can kind of call that a day for that bounce and take this baby lower. I mean, again, at a minimum, on a trade like this, with the risk being what it is, the ATR being what it is, the setup being what it is, of course, minimum for me, I'd like to get at least 3/4 of an ATR. Again, a full ATR would be tremendous. But we'll see. All right, we got a new 5-minute bar here. Kind of a weak showing there out of the bulls, honestly, on that last bar. So let's see if the bears can finally take control. I say finally, it's been 5 minutes. See if they can take control here. Continue this little pattern. All right, not bad, bears. Take out that little low. And we've still got work to do here. Not bad. Keep that moving. Man, not quite there yet. Not quite there yet. Man, we're getting damn close. We have not quite seen it. Have not quite seen it yet. So it's all right. Let's see if the bears can take another run here. By the way, this right here is the part that I think, regardless of how this trade turns out, by the way, maybe I put my foot in my mouth. This right here is the part that's probably killing a lot of you guys, your performance. Not taking that shit early when it feels good to do it. I saw 15 and a quarter, at least, in the money. What have I been saying this entire trade? Minimum for me, about 3/4 of an ATR. That's not 3/4 of an ATR. Just barely under. You know, is that the market's fault? Is that my fault that we missed by a couple of ticks? Not really, just the way that she went on that push. So a lot of you see 13 and you're like, yeah, I'll take it off. I'll take it off and it feels really good. Then I can go to lunch. Okay. You know what one of the worst sayings in the entire trading industry is, and you know who says this is losing traders, is that no one ever went broke taking profits. Good Lord, I see this everywhere. Everyone says no one goes broke taking profits. A whole lot of fucking people have gone broke taking profits. Because they let their losers run, and they take profits when they're 4 points in the money every time because they can't handle holding on to a trade. Horrible, horrendous saying that destroys psychology and therefore performance. I hate when people say this because it's so wrong. It's the complete opposite. What it should be is that no one ever went broke following their plan. Which you should add on, comma, assuming the plan has edge. All right, bulls trying to bounce this baby back up. Now, again, at best here on this trade, we've been about 15.25 points in the money. Was not enough. Was not enough. So now we sit and we wait. See if the bulls can still continue this pattern. The trade's not broken. It's just not working right at this very moment. So risk is managed, of course. Let's see if it works for us. All right, Bears, take control back here. Give us the push that we need for this trade to make mathematical sense. Do it to him. Take it through. Man, don't hate to see that. Come on now, Bears. Get it done, baby. Bears taking their sweet time. It's all right. That's all right. If they're going to get it done for us, they'll get it done for us. All right, Bears, take control. Take control here. Let's take this down through this previous bar's wick low. If they can take it through, even a point or two, ideally more, that would be plenty to follow the plan here on this trade. Bears just kind of putting their feet up. All right, Bears, let's eye up that low a day. ATR is falling a little bit. We're now beneath 20, and there's always a big question if you trade this way, the way I do, or any way similar. Any way using ATR as a measuring stick for structuring trades that make logical and mathematical sense. When ATR starts to fall a little bit, point, 2 points, while you're in the trade, what do? Right? I mean, these are the little nuanced things that people don't think about until they're in the situation. This is the stuff that can make the difference. For me, I think it depends on the setup. In this case, since we have this little new low, technically, hold up, 3/4 of an ATR previously would have been 15, which we've seen. I'm sorry, 3/4 of an ATR now on the previous move would be 15, which we saw 15.25 points in the money at most down here. I'm going to stick, since ATR is kind of bouncing around, I'm going to stick with the number I have in my head, which is 3/4 of an ATR based on like 21. And some change, which we just barely never saw previously. So if we can get a push through even by a point or two of that wick low that we previously did see, that would be enough. All right, Bears, take it through. Get this done. Got my eye on that low right there. That's where the Bears teased us by legitimately a tick or two previously. All right, Bears, give us a test. Take it through. Let's finish this thing. Ooh, you guys see that? That was an algo push through. Let's get a real push through. Come on now. No little wick. Impossible for me to get out on that wick. Let's see here. Come on, Bears. Take it through. Ooh, we got it. We got it. I'm not sure if I got 15.5 or 16 points, but we got the original target. Beautiful. All right, that trade, it teased us, put us pretty much to target within a tick or two. pulled on back, put us in, taking on some heat, in the red, in drawdown. Gotta let it do its thing. Let the trade work. All right, let's move on. Four minutes out here, by the way, from the close of this 5-minute bar. Good way to break the ice there. Giovanni Joe, what's up, big dog? Drac, how we doing today? Good to see you. Michael, good morning. All right, halfway through this 5-minute bar. Brandon, when would you potentially add to a position? That was one of the scenarios where it seems to make sense, looking for a continuation downside, and get a little pop in the opposite direction. I mean, taking on heat, adding, and then looking for continuation. Yeah, you can make sense of that, 100%. There's a lot of ways to, you can make sense of taking the same trade 100 different ways. You can enter with a limit, you can enter with a stop limit. You can look to scalp it using the signal bar and half an ATR as target, or you can look to swing it using the most recent bigger curl. Maybe you size down and give it more room, and then you have a much bigger target. I think in a market like this, even though we are seeing an intraday trend here this morning, I don't know for me if that makes so much sense, because I mean, you look at the range on these days, the last like 2 weeks, they're not huge. We're not really seeing like 500-point ranges. Well, we're not really seeing, we're just not seeing that. So for me to get short down here and look for a 100-point, 200-point target is a little nuts, I think. Does it maybe work? Sure. But it probably doesn't. And by probably, I don't mean 98%. I mean too high of a percent for me to want to take the trade that it doesn't work. Because like it or not, we are in kind of a rangy bull market right now. If you look at the daily chart, which actually here, why don't we pull it up quick? Here, you look at the daily. There's kind of, clear bull trend, but it's so soft. If we saw a chart like this intraday, ignore the price and ignore the bottom. If we saw this intraday, what would we be calling this? A soft bull channel. And then this would be a tight bull trend that probably won't last that long. These charts are all the same. As long as there's enough volume to create clean-ish bars, which, like a 1-second chart is typically not going to have enough volume in each bar to do so. then you can look at them all the same as long as the bars are clean enough, which, again, you start getting to a 1 minute, especially a 2 minute and higher, they start getting clean enough. So, I mean, I don't know. There's my thought process on that. Now, if we entered a bigger trend market and we were seeing bigger intraday ranges, I would definitely be putting on, I'd probably still be short, and I would have put on more risk and then holding the trade for longer, looking for a much bigger target. All right, we're less than 2 minutes out here on this 5 minute bar, and the bulls are trying to put together what is the first legitimate multi-bar bull sequence, at least what would be the first of the day. I mean, this weak as all hell. Big wick back. This, what even is that? This would be the first legitimate one. Now, does that mean I get long? Well, I mean, it's tough. We're certainly in a bear trend. You could get long. Wouldn't be mad at you. Wouldn't be mad at you for doing so, but that bear trend is pretty overwhelming. Now, there's another question here. There's a lot of nuance to this, right? It's like, well, I could risk this full curl. I don't know. That's maybe 25 points of risk if it closed right here. And then maybe I could look for 2 to 1 and just bet that this is going to continue. But then we have the 20 EMA right in the way. Okay, not that that's end all be all. The 20 EMA is nothing, in my opinion, until you consider that a lot of people watch it and it's a self-fulfilling prophecy. So let's keep an eye on this here. Let's see how this bar closes up. Man, that is a strong bull body, huh? That's a pretty decent bull close. I'm going to have to give it one more bar because I really want to see. I'm not convinced that this bear trend is not just going to give up that easily. I'm just really not convinced, especially with the 20 EMA less than 20 points away. And already you see here, we wouldn't have gotten a fill using a stop limit buy. It's just these are the kind of things. And do we pop through? Sure, but instantly on the rollover, we would be pulling the order right now and saying no fill and move on. These are the little things that I think you kind of pick up on that is more discretionary, kind of hard to teach, but you watch a lot of charts and you start going, yeah, I see what he's looking at. All right, one trade down on the day. Good way to break the ice. I'll be back in 2 minutes. Quick break. All right, welcome back. I think we may have a second trade here on the horizon. Let's see how this baby closes up. We're a minute and 20 out. I think we might have something here to the short side. "60 seconds here. All right, we're 25 seconds out. We have a bull sequence, shrinking wiki bull body ahead of the 20 EMA here on the 5-minute chart, and we're now getting a very reasonable bear body. So, let's see how this closes up. And I am looking to I'll just use a limit order here. That closes good. Punch that baby short. Suck risk up to 46. If this takes a bar or two, the 20 EMA will come down, and that's good anyway. But the 20 EMA is not top of mind for me on a trade like this to protect myself. But I don't mind having it between current price and the stop if we can get that. ATR here, 19. Good work, Bears. Keep that moving. Keep that moving. Not necessarily looking to stop hunt here, because it's not only a little ways away, but also, you know, it's more than one ATR away, but also it's a short-lived level, so there's not going to be a million stops there anyway, so I don't think it's worth shooting for that necessarily, at least not with a scalping mentality. There you go, Bears. More work to do here. Keep that pushing down. HR 19. There you go, Bears. Need a little more here out of the Bears. Good, keep that pushing. Little more. Boom, punch out if we can get a fill, and we will. 3/4 of an ATR. Beauty. Let's move on. Oh, wait, we got to flatten the copier. There we go, we're flat. All right, coming in to test this low here. See if the bears can take out that low. I don't want to say it in case we enter a big giant bear trend, but I have half a mind to think, are we just entering a trading range? This seems pretty evenly balanced at this point. After this push, we might take out that low, but I think we might just enter a trading range, to be honest with you. Games, you're thinking about Monday, I think. We had 3 yesterday. Appreciate you, Niles. Yeah, listen, hey, if you haven't yet, please press the like button or smash the dislike button. Press something, man. I appreciate you doing so. It helps out tremendously. Yeah, I mean, look at this. Look at this. Look at this. I mean, also, part of the reason I didn't want to look for a stop hunt, that could have backfired. We could have just dumped through and I'd have been fine with it. Honestly, I don't really feel FOMO at this point. I just don't care. But I think we might just enter a trading range. Now, I'm putting my foot in my mouth. If we enter a big old bear trend, I'm going to go right back to trading the trend. But I think it's not uncommon that a move like this just turns right into a trading range after you have this little tight bear channel. Very, very tight bull move downside. I'm sorry, bear channel. And then you get a bull bounce. It starts to even things out. So let's see. This 20 EMA is, of course, still coming downside. That might push the range a little lower. But I think we're softening up, which makes me a little less inclined, unless something changes, to just take another big swing to the short side. Like we did the first, medium swings, the first 2 trades of the day. I'm going to throw it out there. Now, I need you guys to understand. I'm not just blindly trading this idea right now. But I'm going to throw it out there. I think we're going to see this. More or less. Make adjustments as necessary. But I think this might be kind of it. Now, am I getting long on that idea? Of course not. No. But I'm starting to think what that does do for me is say, yeah, I'm not sure I'd short a bear body closing here. Unless we saw another big push through, in which case, all of a sudden, I'm open to it again. You know, again, hey, FOMC today at 2 o'clock Eastern, 1 o'clock Central, 11 on the West Coast. You know, it's honestly like I'm a little sad that Powell's term, you know, it's another year and it'll be probably somebody else. Which is kind of weird. Like, Jay Powell's kind of been the guy. As much as people like to hate on him, I think we all kind of love him. All right, well, 3.5 minutes left here on this 5-minute bar. I'm telling you, I'm thinking trading range. It's just, it's kind of hard. I mean, if we saw a reasonable bull body, I would not be against buying it to see if we can just kind of backfill maybe another third of the trading range. That's a reasonable trade. It would certainly be a scalp. It's not like a big swing back upside to 24.6. I'd be trading the whole thing within this little range here. Well, let's see. Let's see if the bulls can get anything done here and keep it low enough for me to have room yet and keep the risk kind of tight enough, which here they are giving it up. Let's see. 3 minutes is a long time. Mike, good morning. How we doing? All right, we're a minute 35 out here on this 5-minute bar. Let's see. Let's see. Does this trading range play out, or do the bears just continue this? I'd love if the bears continue this. I'm just not really sold yet. Here's the test. Do the bears take it through? And if they take it through, do they hold it through is the question. Just a little pop through means almost nothing until you get a close or two beneath there. And spend some time beneath that level is the more important thing. 45 seconds left here on this bar. Let's see. John passed an Apex 50K account. Been working on it since late August. 2 to 4 micros at a time. John, tremendous work. Tremendous work. If you're passing your eval the slow way, here's how I think you should do it as far as prop from start to payout. You want to keep your expenses as small as possible up front. But then once you have a positive expected value in your business model, your prop trading business, Once the ROI has flipped to the positive side because you're taking payouts, then isn't the goal kind of to have as high of expenses as possible in a way, right? Because that means you're being aggressive, and as long as the ROI stays positive, then you're making more and more money, most likely. People don't think this way. They think expense is bad. It's a blessing to have a shitload of expenses, because it means you're probably also making a shitload of money. Probably. Maybe not always. But my point is, if you can start off taking an eval and have the discipline to trade it the slow way, and you pass the slow way a few micros at a time, that means that more than likely in that market environment, you had positive expected value. You had a statistical edge, rather than just trading 10 minis and passing it in a trade and you got lucky. Right? Now, you pass it the slow way, you get funded. You trade the funded the same way until you get a payout or 2 or 3. Then, as time goes on, what I think it makes sense to start doing is you trade the funded the same way. Don't change the way you trade the fundeds. But then the evals, you can size up and get more aggressive, which, yes, is likely to increase your expenses. But the goal is to get more funded accounts, because on average, your average funded account has a positive ROI. So expenses creep up a little because you're trading the evals more aggressively. Why? To save time. Opportunity cost is a thing. And then you trade the fundeds the same way you started, slow. And then you ideally are getting payouts on 5, 10, 15, 20 accounts at Apex. Which, by the way, perfect time, is 80% off, and you can pass in one day if you're at that point of starting to be more aggressive. If you use code BIG, B-I-G. All right, Bear's testing this little low. Let's see, man. Again, I think I'm more sold on the trading range than anything, but I'm not just going to buy it blindly. That's stupid. Okay, so there's the test, popping it through. Let's see if it holds. That's the big question. Halfway through this 5-minute bar. Let's see if this thing holds down. I mean, you see this guy's look immediately coming right back into the range. All right, 42 seconds left on this 5-minute bar. Let's see here. All right, inside close there. You see this closing inside of the previous bar's wick high. Of course, that wick was a little sizable, which kind of shot us in the foot on this bar. But, I mean, thus far, trading range. Trading range, like we talked about. Let's see if that holds up. All right, I think it's poll time. I think it is time to start. A little poll here. All right, what do you guys think? I am taking an FOMC market effect poll. Now, this goes for basically the rest of the day after FOMC hits. I'm not necessarily talking instant. I'm talking just, hey, the rest of the day result. Higher, lower, or sideways. Of course, within reason. Okay, so we're looking at 18% so far. I think it's going to go sideways. Out of the remainder, those voting higher or lower, the majority of you guys think that this thing's going higher. Now, in the chat, how much higher? Are you guys thinking like slow grind or skyrocket? Back to highs? I mean, shit, to get back to highs, you're talking 250 points. It's not nothing. $100 points plus. We'll see, man. A little bit higher. Slow grind. Dumping to the core of the earth. Any movement's cool with me. I really do not care which direction, as long as it gets this market lit. We're gonna light a fire under this market, man. start making this thing move a little more, I am thrilled. I don't care if it's tanking. I don't care if it's skyrocketing. Honestly, tanking is probably preferable. At least for active trading. Because it gives you... What do we always say, by the way, about bear markets around here? Big bear trend markets. Everyone always looks at you like it's a bad thing. Bear markets for us, tremendous. You get a whole bunch of trends, which take a little bit less energy to trade, honestly. Because it's kind of an environment where it's any reason, any excuse to get short, at least for me. Oftentimes you end up doing better when the market's moving, right? Rather than just ranging sideways. And if it's moving downside, oftentimes it does so more aggressively because fear is more powerful than greed. At least in terms of market volatility. And then what can you do with that money once you make it? Drive it right back into the market at lower prices. It's beautiful. Now, long term, of course, I'm going to bet on America and drive it right back in. I don't want it to go down forever, of course. But if it's going to fucking go down, we might as well try to ride that trend, actively trading, and then drive it back in at cheaper prices for the investing side of things. Which is how you really, really make a lot of money. We're still testing the little low end of this range. Now, I'm not going to leave this drawn, but this is really common. You start getting a tighter range within a range. Usually this little line ends up breaking if the range itself holds. Let's see. All right, let me check on this poll. Man, if you don't think it's going sideways, if you think it's going to pick a direction, the majority of you guys think it's going higher. After FOMC, it's interesting. Here's the test, 90 seconds out. Jim, I say higher if they cut 50. 25 basis points is already priced in. Maybe a little bump up to yesterday's highs. You know, yeah, there's so much chatter about what's going on at this meeting in particular. That when there's too much talk, it's almost impossible to live up to the hype. No matter what they do, because they're not going to do something crazy. The Fed is notorious for taking things slow. But if they do cut by 50, will it take people a little off guard? Sure. But this is always like a big cauldron. You have to think of this news as a big giant cauldron that you throw everything into, and then you stir it up, and you look and say, Okay, in my opinion, does it float? If the recipe ends up the way that I'm thinking about it, meaning if they cut by 50, you throw some excitement in, right? Cutting's good. Market likes cutting. Market likes low rates. Market doesn't give a shit if we're going to have to make up for it later. The market loves inflation. If you already have money, here's the reality. If you already have some money, you don't even have to have a lot of money. If you have some money, inflation is great for getting richer. But inflation hurts most people, of course. And the market is a whole bunch of rich people and institutions who say, inflation? Sign me up, man. Love it. Market gets real lofty when inflation is pumping until we have to start raising rates. Then they say, all right, party's over. Okay, so you throw some excitement into the cauldron. It's heating up, and now you think, well, wait a second. This is going to create some uncertainty. Like, the Fed destroyed the market in 2022. What if they have to do it again? I don't know, man. I'm a little nervous about that. You throw that into the cauldron. Throw everything else in, stir it up, and say, does it float? Do the same thing with 25. It's not so easy. News is one of the more difficult, especially Fed news like this, is one of the more difficult things to trade directly, which is why I think it's important to just let it hit and then trade the aftermath. And if you're gonna trade it directly, let it hit, and if it tanks and you look at your cauldron and you're like, I don't think this is that big of a deal long term, midterm, I don't think this is that big of a deal, then you buy and you invest. But trading it short term, really, really, really tough. Trade the aftermath. Oh God, Vinny, don't say that. I think the Fed will have lost the plot if that happens. All right. I mean, I don't want to be that guy, but kind of exactly what we talked about is playing out. We're kind of sitting in a soft trading range, and as the 20 EMA comes lower and lower, maybe we're seeing that push it tighter and tighter. Talked about this like 40 minutes ago, which is why I have not taken anything since our second trade of the day. But 60 seconds out, looking for trade number 3. All right, our poll is only getting more and more bullish as time goes on. If you haven't yet voted, hit the poll in the chat. And then drop in the chat How much if you vote higher or lower? Add some context. Ooh, Jay, after rate decision lower down to 24K. That'd be quite the pullback from all-time highs, huh? Honestly, I wouldn't hate it. Wouldn't hate it. Whatever keeps volatility high, man, that's what we want. That's what we want. We want America to win. Fucking huge, long-term, mid-term. And in the short term, for us to be selfish. Which, you know. But as active traders, hey, if it takes a bear move to get volatility kicking and put some money in our pockets that we can then drive back into the market at cheaper prices, we'll take it. We'll take it as active traders. We are sticking to the low end of this little range that we drew. So, eventually we're going to pick a direction and go. Ideally right now, we would just backfill this range, but we do have the 20 EMA kind of in the way, coming down into the middle of this range, which kind of throws a wrench into things. Pun intended. Yeah, one loser. Big deal, right? Keep it pushing. Keep it pushing. You're going to lose a whole lot of trades over the course of your career. All right, Bears testing this little low Having a really tough time. This thing's tightening way down. I mean, you could just draw this wedge at this point. So I think what we'll do is let's just clean this up a little and still leave this out. Again, range. None of these lines are an exact level. The wedge line maybe a little bit more. But these top and bottom levels, just an area. Roy, I just recently heard a quote, said 90% of retail traders are right, but their timing is wrong. Well, then you're just wrong, Roy. No, but seriously, the way that I think the most effective way to clean up your trading if you're just losing and getting brutalized over and over and over again, do two things. Change nothing about your actual entries. Trade smaller, number one. And widen out your stops. Number two, take a wider, more obvious stop. So if you were getting short, you know, here, let's say you shorted this bear body. Rather than risking maybe the signal bar when you're newer, okay, trade a lot smaller and risk this. Right? And just give it time. Lean a little bit more into a swing trader mentality if you're really new and you're having a lot of trouble. If those two things are true, you're very new, and number two, you're having a lot of trouble, do these two things. Size way the hell down and widen out your stops. Take the same entries. Ideally, some form of price action or something derived from price action. Ideally, you're not just trading based off indicators. They're not real. But price action is very real. It tells us exactly what everyone's thinking in the moment. And it's never wrong. You're wrong if it goes against you. Don't look at it as I can't, you know, oh, this sucks. The market shouldn't be doing that. What the hell is it doing? If it's going against you, look at that and say, yeah, okay, that's interesting. That was maybe a lower probability thing that just happened. But that's interesting. Let me see what I can do here to clean this up. All right, 60 seconds left here on this 5-minute bar. We are getting smushed inside of this wedge. Yeah, you know, Skeptic, that trade, getting short here, risking the signal bar, it's not a bad trade. But you said you got stopped out by a tick, this bar, right? This next bar stopped you out. You have to understand, when you're looking at this, you know, in that moment, you didn't have the benefit of hindsight here, but you still could have drawn it maybe like this. And getting short down here, if you're gonna do it, which I did today, I think, this bar? I forget, I don't remember. By risking this signal bar, you're kind of shooting yourself in the foot if it backfills the range. If you're gonna take this short, you need to say, all right, yeah, but we've been seeing a little bit of bull strength. It's a bear trend, but it's a softer bear trend. So I'm gonna take the short with the understanding that a little bit of heat is okay. And in doing so, I want to stop myself out once the channel is, this little channel is completely broken, which means up here, or maybe up here. Does that make sense? I feel like that makes a lot of sense to me, right? All right, Bear's trying to take it through. That wedge wasn't really giving them much choice, but let's see if they can hold it. Just to test through means nothing. Hey, listen, if you guys haven't yet, hit the like button. Or smash the dislike button. Hit something, baby. Does help out a lot. Appreciate you doing so. All right, our poll is only getting more and more bullish. 50% of all of you think it's going higher. And if you take out the sideways votes, the majority think it's going higher. Versus lower. Currently struggling with revenge trading. Any advice? Okay. Assuming you have a plan that has reasonable rules and you're following it. That's a big assumption for a lot of people, but let's assume that that's true for you. I think the best way, now this depends on what time frame you're trading. If you're trading a 5-minute or higher, I think the best way to stop revenge trading, or at least heavily mitigate it, is to add another rule that says you never enter on the same bar you got stopped out on. Sometimes you'll have a bar that stops you out and then immediately rolls over. Sure, but you want to keep the rules simple. So let's say you're trading a 5-minute chart, you get stopped out, there's 3.5 minutes left on the bar. That's 3.5 minutes that you get to sit with your thoughts and calm down. Which does, believe it or not, that helps a lot. Now, if that doesn't work, then you gotta start being more strict about it, but that also assumes that you're gonna follow that rule. But that's a quick thing you can do. If you're trading like a 1-minute chart, maybe whenever you get stopped out, set a 5-minute timer. And actually stick to it for a week and see if it helps. It probably will. Your mindset 5 minutes after getting stopped out is a little different than instantly after getting stopped out. Damn straight, Roy. Whole lot of new people here. Hope to see them all become regulars here in the chat. Along with all the OGs. Oh, by the way, one thing I will add to this, struggling with revenge trading, in addition to what I just said, something I have heard of traders implementing who cannot stop themselves is, this depends on what your style of trading is. If you're a scalper, this might not be practical. But if you're taking less than 5 or 10 trades a day, and you're trading a large portion of the session, I've heard of people, assuming you have the ability to do so, you live in a place where this is somewhat reasonable. When you get stopped out, you walk around your house. You take a quick walk around the block. You just go outside. That right there will take maybe 5 minutes. And then you come back and sit. Now you've effectively done both things. You've grounded yourself and taken a few minutes to let your emotional drive calm itself. Which, believe it or not, it sounds like it wouldn't do much. It helps a lot. I have prescribed this to quite a few traders with success. Leo, what's up, brother? How we doing? Good to have you. Okay, Vinny, what's the average scalp trade amount per day in your opinion? I see a lot of mixed info. Okay, this greatly depends on a number of factors. A, market environment. It really depends. If it's a really, really strong trend again, this depends. If you're trading prop in a really strong trend, it's probably in your best interest to scalp through the trend, but don't stop taking trades through the trend. Okay, like a lot of people, they'll take the first scalp in a trend and then never hit it again because they're scared. And they would just be better off in that case taking a swing trade and letting it go. But when you're trading prop, taking a swing and letting it go 300 points is kind of dangerous because of the trailing drawdown. So you're better off taking scalps the whole way up. So in a personal account, in a big trend, 1 or 2 trades a day makes sense. In prop, in a big trend, you might be taking 10, 20 trades that day. Now, in a personal account or prop, If it's not a big trend, which is going to be the case like 95% of the time, then it depends what time frame you trade in. The 5-minute chart, 5 trades is normal. 2 trades might be normal on a certain day, like today, where we're kind of dying heading into not only the point of a wedge, but also FOMC. You guys have seen me sit here and take 10, 15 trades. That's also normal. Don't focus so much on the trade count. And by the way, pre-market, scalping small cap momentum stocks, recycling shares. I know this sounds nuts to a lot of you guys, but this is the reality. It's not uncommon to look at all your tickets at the end of the day and say, holy shit, today was a hot day. I traded for 2 hours and I took 115 trades. That sounds insane to a lot of you guys, but you don't, it's a different world. Okay, it's the 1-minute chart. You're recycling shares all day long, tickets going out, tickets coming back in. It's very normal. Now, that's not every day, of course, but on a really hot day, that's not bad. Don't focus so much on trade count. Focus on a goal. And the goal, we talked about this yesterday, a really good goal is to, if you're scalping, look at the day's range in points. And if you can make, on average, 25% in points of the day's range from New York open to New York close in points. So let's say the range on the day was 100 points. If you can make 25 points on an average day scalping, you are doing tremendously well. You're in the top 1% of traders. And by focusing on points instead of dollars, you're not capping yourself psychologically. 25 points is the fucking same, whether you're trading 1 micro or 50 minis. If you focus on dollars, if you say, my goal is to have a $10,000 day. What happens when a day comes where if you weren't boxing yourself in, you would have made $125,000? Don't do, I know that sounds, you're like, that's not possible for me. Bullshit. Bullshit. Don't box yourself in. Because that might be coming. If you think in terms of points, that boxing is no longer a concern. 2.5 minutes left on this bar, by the way, coming into the 20 E-man, the 5, that's sitting 10 points away at 420. This is not a newbie question. This is actually a pretty smart question. Do you wait until New York to get the ATR for the day? If I'm trading pre-market, which, I don't know, I mean, sometimes, I'll just trade the ATR in pre-market. I don't like to overlap. You know, meaning if it's 8:35, 5 minutes after the opening bell, am I looking at the ATR that's made up of 90% pre-market bars? No. It starts to get a little bit nuanced. But the deeper you get into the day, by the time like 8:45, 8:50, 8:55 rolls around, that ATR starts to clean up a bit. A lot of times that ATR is going to peak 10 bars in. Whatever time frame you're on, it might peak. Because now you're averaging in all 10 of the after the open bars, and a lot of times that's going to be the high of day on the ATR. Not in price of the security, right, necessarily, but on the ATR. So, yeah, I mean, just think about it that way. There's always 10 bars off the open where you're averaging in some pre-market and some after the bell. And if you just understand that and also show the range down here, which is these orange vertical bars, it's the range in points of each individual bar versus the red line, which is the ATR, the average, then you kind of know what you're looking at. actually a good question. So the range on the day is 150 points currently. So let me think. Yeah, so I've made about 30 points. Which is not 25%, damn it. I went over yesterday the 25% goal, but I'm sitting at 20% the daily range. Which is fine. But it, you know, goes to show 25%, I'm telling you, it puts you in the top 1%. That is a very difficult goal to achieve, especially consistently. Very, very difficult. But doable. Which is why I set, you know, I don't set that goal so you can go and smash it in 3 days. I set that goal for you to set your sights on long term, because you have to understand, if you're not there yet, almost nobody is. Right? That puts you as top 1%, one of the best traders in the world. If you can pretty consistently get 25% in points of the full New York session daily range. Yes, that's exactly right. And hey, maybe your percentage is different. 25 is just what I threw out there. I think that makes a lot of sense as a big goal, because we're fucking going big around here. But if you're like, you know what? Okay, let me shoot for 10. Fucking right, man. If you can hit 10 consistently, you are already killing it. 25 is just that bigger goal. All right, bulls coming into that 20 EMA here on the 5. We have not seen a test of that level. It's been 2.5 hours. It's been 2.5 hours since we've tested this EMA here on the 5-minute chart, and here we are right now getting a test. All right, hey, listen, quick reminder. FOMC here is at 2 o'clock Eastern. That's when the interest rate decision hits. 1 p.m. Central, 11 a.m. on the West Coast. If you are trading take profit accounts, you cannot trade that. Okay? So you got to be flat when the interest rate decision hits. Okay? Don't trade for a few minutes before and after. And then remember, Powell is speaking 30 minutes after that. Okay? So again, at Take Profit Trader, currently they are 40% off and no activation fee, which is fucking tremendous with code BIG, B-I-G. All right, guys. I will plan to be live again here for the interest rate decision. So I will see you guys in about an hour and 15 minutes. All right, subscribe to the channel. Hopefully we get some decent movement here. A lot of you guys think we're going higher based on the market poll in the chat. So let's see, man. I'll see you guys in an hour 15.